Hello, hello, hello. Good morning, good afternoon, where you are. Good, very early morning from the people in the Americas on the other side of the pond. We are 17th of December, Tuesday, and welcome to the Flow Show once again. Ryan is not in today, so this is Cayman. I'll be your host for the day. First of all, starting a little bit with our offer that we have running for the end of the year, our holidays and New Year offer to join our community at Forex Analytics here. I'll quickly put the link on the board in the chat room, and so you can follow the link if you want to take advantage of the offers that we have running. You can buy 1 month and get a month for free. You also get 40% discount on semi-annual subscriptions. So don't hesitate, come and join one of the most active and best communities that there are on the web these days. So that we will see you soon there. Right, let's move over to what has been happening yesterday and overnight. First of all, going back to Canada, Finance Minister Freeland gave her resignation. Trudeau apparently wanted to push her on into another role. She didn't like it. She also didn't like the way that Trudeau was handling the USMCA discussions with incoming President Trump. So there was a lot of discordance. She gave up and handed over her resignation. Trudeau already replaced her with Leblanc. Leblanc is the guy who is responsible for security right now in Canada. He also went over to Mar-a-Lago about a week ago after the Trump's re-election and was part of the negotiation team over there. So Trudeau is trying to keep the pieces together, but not succeeding very well, as the calls for him to resign are getting louder. Under which the new Democratic leader Singh said that he really should go. Other news in Canada is not really great either. There are reports coming out that Canada is to miss the budget deficit target as the spending is going up. So for the Canada, and we see here with the CPI upcoming, news is not great. Add to that that last night McClem was on the wires as well, saying that the economy could continue to grow below its potential, and that would pull inflation down. He also wasn't sure what the potential tariffs and stuff would mean. So he was again very cautious. Kind of dovish, and we find it back in the value of the Canadian. I'll have a look at that if I have the time today. But the Canadian dollar is really quite under the cush right now. Various reasons, as I already mentioned, and with the CPI coming up, if that would come in below expectations, I wouldn't be surprised if the Canadian dollar gets another knock on the head. What's happening elsewhere? So China, they fixed again in the 718s. Um, the Chinese leaders are still planning to keep the growth targets for 2025 at 5%. They did raise the budget deficit target to 4% from 3%. But it's still not very clear whether there will be a big bazooka coming out. They are putting together loads of stimuli. Um, Not really helping the Chinese yuan right now, but we also know that at one point, depending on obviously on what Trump is going to decide with those tariffs when he takes the seat, depending on that, it may be that at one stage the Chinese economy hits a bottom and starts to revive a little bit. But for the time being, all of those stimuli don't really change the plan too much. And that brings us over to Japan, where the Japanese government succeeded to vote to get the vote in for the budget. As I already said several times in Japan, it's not like elsewhere where oppositions are just there to shoot down everything that the government wants to do. When it comes to stimulus, the Japanese usually are pretty docile and vote for stimulus, whatever can help the economy. At the same time, we had Reuters poll coming out, and that was the question was asked in regards to the Bank of Japan expectations to the investors, to speculators, and other market participants. And up to over 90% now of the speculators see the Bank of Japan holding their hands still this week. So that is gradually getting towards a full expectation of the Bank of Japan not moving the interest rates, as we have been discussing several times already in our show. So I don't think the risk is zero for them to move. I still think there is a possibility, but of course those two messages that had been sent out last week, I have reduced the expectations for an interest rate move greatly. So that is going to one that is going to be scrutinized very closely, because the Bank of Japan, as we know, is coming hours after the FOMC, if I'm correct. Yes, that is correct. Hang on a minute. I'm just checking. Yeah, that is correct. FOMC is tomorrow. Bank of Japan is just the night after. So that's going to be your next mover for everything yen related. What else is going on? Yeah, so yesterday as well, as expected, Germany's Scholz lost the confidence vote, and now we are heading towards elections in Germany in February. We're of course going to keep an eye on which side of the political scene is going to start getting. Let's hang on a sec. Is going to get the more votes that will also, I think, depend partially, potentially depend on what Trump is going to do versus Europe, because since it's February, by then he will have taken his seat already again. And if he starts to talk against Europe, I think that the extreme sides of the political scene could all of a sudden get even more votes, as they already have right now. Moving over to oh yes, yesterday we had this Trump press conference, and mainly the major thing was to announce SoftBank, Maya Son, plans to invest $100 billion in the US over the next 4 years. That is the next US presidential tenure of Donald Trump. Got to know that when he was elected in 2016, Son already promised 50 billion investments. I don't know how much exactly have been really invested over those 4 years, but 100 billion, it's quite how shall I say, optimistic, because right now SoftBank has about 25 billion in cash. So there's going to have to be some serious money being raised there to reach those 100 billion. But anyway, he was there to announce it, and of course that's another victory for Donald Trump. He also said something about the Ukrainian and Russian war. He did again say that Ukraine may want to go and sit around the negotiation table. So already the second or the third hint that he gives in that direction gives us an idea about how he is going to try and, as per his promise, end this war. It's probably going to be trying to push Ukraine to give up some, at least, of the gained land by the Russian troops. So this is something that he said yesterday as well on the press conference. What is happening elsewhere? Coming closer to home. Coming closer to home. Yes, coming closer to home. Switzerland yesterday revised the economic bureau revised their expectations for growth and CPI for 2024 and 2025, both lower again. So that is in line with what the S&P was already highlighting during their meeting last week, where they cut interest rates by 50 bp. So still, the Swiss franc is a bit under the cosh. Again, this morning, the dollar Swiss and even that barometer that is Euro Swiss, when a weak currency strengthened against another weak currency, that means there's a second one. Swiss in this case is still really feeling a lot of heat now. Again, I need to warn, or I need to caution here a little bit what I'm saying and even doing, because I'm a little long dollar Swiss and sterling Swiss myself, but I am also still taking into account what happened last year, where we were discussing that on the meeting no later than yesterday, saying that we could be waiting for the confirmation of the FOMC, of the rest of the central banks, and then all of a sudden have a concentration of very late year-end flows. And remember what happened last year. So I'm still being very cautious on what I'm doing. I'm nowhere near full positions at this time of the year, and adding to that, I am remaining very, very flexible. But in the meantime, as I was saying, there is not too much reason for buying fundamentally. There are no fundamental reason for buying Swiss franc right now. Okay, comments in the UK. Rachel Reeves came out yesterday, and she said that after the low growth that we had in Q3, she is not planning to hold emergency tax hike meetings if the lower growth threatens the budget. She will rather instead freeze the spending. It's just one that she said, but we need to keep an eye on what's happening with those UK fiscalities, because the market, as we know, can flip relatively quickly on all things sterling. For the time being, sterling is doing pretty well. I'll run over the data in a minute or so. Elsewhere, France Central Bank also revised the growth for 2024 and 2025 lower. So they revised their growth outlook for 2025 to 0.9% from 1.2%. Rings a bell. That is what Germany did the whole of 2024, and even already in 2023, France is also now thinking that the Banque de France, at least, thinking that growth will again undershoot targets and expectations in 2025. So some of it will probably be linked to potential trade wars or so, but it's still not looking rosy in France. And coming to the ECB bots, we had two of them talking this morning, Casimir, and the two of them were relatively interesting. I'm going to say, Casimir. The interesting bit was that they will discuss the neutral rate once they will get closer to 2.5% at the ECB. So he's giving us a hint at where he thinks that they should be starting about to talk about the neutral rate. We have been saying that the risks are for them even having to undershoot, but he finally stuck a number on it, where most of the other ones, Lagarde especially, hasn't yet pinpointed a certain interest rate where they would discuss about the neutral rate. Casimir said it's about 2.5%. Ollie Rehn, he said, well, and that is something we also talked about. He said that they will have more inflation by the next meeting about US trade policy. So that's what we've been repeatedly saying. They're all looking at what Trump is going to do, what the trade policies will be looking like to decide upon the next steps. And he also added that the monetary policy will cease to be restrictive by late winter, early spring. So that means that he is now expecting more rate cuts as well from the ECB. And I think roughly through whatever has been said. So let's look at what the data were yesterday. Very, very quiet in the afternoon. We did have that very weak New York Empire State Manufacturing Index, but look at the volatility of this data point. It did have an exact 2-minute impact in the market, and then the market started already to look at the US PMIs, which came in better. And again, like with all PMIs, basically worldwide, we see an outperformance of the services sector versus the manufacturing sector. Okay, manufacturing sector still well below the 50 mark. Services PMI was actually a pretty decent report because it came with an activity increase, not so much pushed like we have seen in Europe, not so much pushed by prices as such, although there has been a big spike in shipping prices because we know that ahead of potential trade wars, people want to front load everything, so they are now increasing their imports and shipping. So that was part of it. But prices were only a minor part of the uptick. Is the activity that was doing pretty well. So that is a relatively positive report there as well. So that just adds to this whole bucket of what's happening in the US versus the rest of the world still. Moving over to Aussie land, Westpac consumer confidence coming in a bit negative. I've been saying on various shows, especially on Phase, that I would be looking to perhaps buy a bit of Aussie into the year end. I am patient, all right. I am patient. I don't like what I see coming out of Australia right here and now. So this is something I'm monitoring the markets. I'm looking at what's happening elsewhere, especially on the US side. But I don't think that personally I'm going to get interested in anything Aussie ahead of the FOMC because, as we've already said several times, the FOMC is now expected to really be a hawkish meeting, despite the very high possibility of a cut. It's likely going to be a very hawkish cut. Kiwi budget balance didn't move the needle too much either. And then we had the interesting bit of the morning, and that was that UK jobs report. Now, excuse me just a minute, just 10 seconds, please. I'll be back. Sorry, I needed a sip of water there. So we had the important news of, well, for what the UK is concerned at least, of the morning, and that is a strong labor report. And as I was commenting this morning in our community, it just pushes that Q3 GDP report that we had last week, where the sterling got a knock on the head. It just pushes it further back into the rearview mirror. This is, well, a very good report for the UK, obviously. We saw the unemployment rate stay stable. It is historically a pretty okay unemployment rate, by the way, but we saw very good 3-month and 3-month employment change here. The claimant count also was good. The revisions were quite good, but this one is going to be a difficult one for the Bank of England. The earnings have shot up. Because if you have an earnings index which moves up more than 0.1, 0.2 over one period, it's pretty good. Bonuses, of course, they could be a one-off, but still, I mean, if you include everything, it's a pretty decent rise. That's going to be one that potentially, I'm not saying they will. My base case is evolving and it's turning around 50-50 right now, that they may actually hold their hands still. Now, they could still go for a 25 if they bang themselves only on the growth. But if you look at this report, they should be on hold. Now, we've got one more upcoming, and that's a big one tomorrow, and that's going to be the CPI. If that CPI comes out also sticky in the UK, I think the Bank of England is probably going to hold their hands still. I've already said it could be one of the more hawkish central bank meetings that we see in December. Well, this report this morning is supporting this case right now, but we still have one big hurdle, and that is tomorrow's CPI, obviously. Moving on, I already spoke about those economic forecasts. They are being revised lower in Switzerland as well. Then we had the German IFO and the German zoo coming out. Bit of a different picture in one and the other. But the expectations number here in the IFO are still very weak. There was a bit of a better one on the current assessment right here, which is in contrast with the current assessment on the zoo. And but the expectations, as I said, are low here. The expectations are the economic sentiment in the zoo report is better because it's based on the fact that people expect more rate cuts and that the inflation spikes that we have seen of late would be temporary. So that is the main explanation for this number to be higher. This is unfortunately just a picture right now, because we have seen that economic data in Germany are still not of the like of really being supportive, but people cling on to more expected rate cuts. Okay, right. What's happening for the rest of the day? So now we have the really last. Okay, we have IP later on as well in the US, but yeah, I mean, take both together if you want, but especially the retail sales, I would say, because the consumer is one big area of focus for the Fed. And we have the retail sales out today. Expectations are for it to improve slightly. These are not massive numbers, but taken at face value, we're expecting a slightly improved picture. It could move the needle a little bit if the consumer would disappoint on this one. But when we see the actual sales that we had and Black Friday sales as well, we would dare to expect that this number is still going to be a relatively good one. But it could be a bit of a mover today, especially if people in the bond market feel the need to do some last adjustments ahead of the FOMC, and that's going to be then confirmed or infirmed by what we will be seeing on the industrial production report a bit later on. So that's on the docket for today. We also have some more auctions this week. All right. So the 20-year bond auction wasn't really a very popular one, but Yellen really put that back onto the fore here and so we have another one today to monitor. If that would be a weak one, that would testify that the market is still looking for a hawkish report tomorrow. And then we ran over tomorrow. I already noticed that. And I think these may be the final November CPI numbers for the Eurozone before we move then into the next Well, the big one, the FOMC tomorrow. But then Ryan will be back and we will talk about the FOMC in length tomorrow. Let's move on to what happened and what the markets are telling us. And while I'm shifting screen, I am just going to look at some of your comments. Do you see my the US 10-year here? Um, can somebody just tell me that you're seeing my charts? You show Tozi Ali, Long Cat. Okay. Ah, you only have good positions, Ali, today. Okay, thank you, guys. All right, we were talking about this level here at 420 on the US 10. So this move, Ryan already showed. I think it is possible, you know, if we get strong retail sales, that we are going to move up to the 61.8. Should we do more? I wouldn't think so right now, even with the FOMC, because the FOMC start to be relatively priced. Now, who says higher yields in the US says, of course, a relatively supported dollar. I will be looking at the currencies. The dollar is indeed supported globally. Apart from perhaps a couple of exceptions, but globally speaking, the dollar is pretty well supported still right now. I think by the time if we get here, it should be relatively priced. I would be really surprised if, unless there is some dollar shortage or so, what the market didn't take into account. But I would be surprised that only the FOMC or the data that we saw now is worth more than nearly 30 pp's on the US 10s. Okay. Also, the 2-year is pushing higher from around that same zone there between 415 and 420. We're pushing higher here as well. Add another 5-10 bps. I think that should be it until the FOMC. But obviously, if we add those 5 or 10 bps onto already buoyant yields, it may mean that ahead of the FOMC, and that is still what I kind of expect, ahead of the FOMC, we may see more dollar demand, or at least the dollar remaining pretty big. Currencies. Euro dollar, I prefer not to look too much at it. It stays weak. I, I haven't changed my mind. I think we could go for a little bit of a test before the FOMC. Now that I'm on currencies, I want just to mention something. And I don't know if you guys, if everybody noted what happened yesterday into the London fixing, 4 p.m. London fixing. We did see dollar supply. And I'm not saying we are going to get a repeat every day, and I'm not saying we are. These are the year-end flows already starting. I just noted what happened. We saw dollar supply yesterday into the fixing. Now, it is possible, it is just possible that we are going to see this kind of scenario starting from now, or maybe even accelerating after the FOMC, once we had confirmation of whatever central banks want to do to this month. So we could see a potential scenario where fundamentals play a role during the day, and then you see the fixing upcoming, and all of a sudden the dollar being offered. You remember, I mean, it's still one of those things that I was watching last year, and then comparing what the equity markets have been doing this year as well. It would be logic to me that we see this kind of scenario. Okay, so just bear it in mind and start watching the clock. Okay, on especially from now into year end, fixings may get a bigger attention, and may see the bigger flows actually starting to develop. Okay, so just keep that clock close close at hand. Okay, sterling, as I said, it looks as if this Q3 GDP is now going further and further into the rearview mirror. We had this good jobs report today. Cable jumped a bit, but but we are stalling here around, and I should perhaps add a bit of a line here because clearly intraday market is eyeing this 127, the figure zone. So we had a bit of a spike above and then came back below. We are close again, but again, look at what's happened yesterday. This is the 3 to 4 p.m. move in Europe. Okay, this is our 3 to 4 p.m. move. We similar that I was talking about in the euro. It happened in sterling as well. So start to bear that in mind. I will for sure do it. So bear it in mind. As a whole, I think 126.10, 127.35 are the two extreme that we should be monitoring here. If you get a break of either side, um, it should move further. Now, watch out for that tomorrow CPI. Okay, really watch out because we could have a test here and then start to move higher again. For that, CPI should underwhelm just only a little bit. We could see this kind of move and then stabilize. If it's really very low, then that would bring the hike expectations for the Bank of England, which have been reduced since the jobs report this morning. The hike expectations would be again increased, and we could see actually a test or even a temporary, if so, break of this 126.10. If in turn we start to move above 127.30, 35 again, I think sterling may be off to the races. And okay, and I know everybody is entitled to different opinions. I still think that sterling would be one of those currencies, providing we get the data to support such theory, that could do well into year end. Okay, euro sterling, similar picture as the sterling. This really, as I said already yesterday when we spoke about it with Ryan, that looks to me to have been a stop run. And now we are already back around 82.60. Look at it, that 82.60. It has been a bit of a level of activity. Okay, so we are turning around. But if you look at the longer term, and which we always have to do, we already spoke so often about this 82.40 down to 82.15 zone, 82.35, 82.60, 82.15. It is a long-term level, okay? It is a long-term level. Now, I still think we could go and test it at least getting into year end, just for the reasons that I mentioned about sterling. My expectation is that sterling could do well into year end. If we start to see those moves, be careful because below there could be a bit of an acceleration, especially if it would go paired with the kind of year-end flows. Levels that I'm looking at below are around 81.10 to 80.75. If we get down there, this could accelerate if it breaks. Okay, this is what I think. Rest. I'm not really too interested nor involved in what's happening in the yen right now. Just note that we are back on this 153.65.80 zone. If that breaks below, we could see a little bit of an acceleration. Watch those retail sales for that. Watch those yields for that in the US mainly. Okay, see what goes on this afternoon with the dollar, but. Break below 153.40, but I do think that the first real support should be seen around high 152s. Hold it and get better US data. We could go back up to that 154, 45, 50. It's been a bit of a zone here as well before talking about 155. But if the report in the US is better, together with those expectations that we have seen earlier from the speculators, we could be trading 155 into FOMC and Bank of Japan. Okay. All right. Let's see. Canada. Canada. Okay. I didn't really put too much effort in the dollar cat because I have not really been interested too much in really the Canadian. I should perhaps, but this is looking very explosive from when we broke above 141. This is April 23 level around which we are turning right now. But I did put something on another time frame, and I kind of lost it for whatever reason. Let me just try this one. I think this one was the one that I put on. Okay, yeah, this is the one. So we are already above the 127 extension. If we get a weak CPI this afternoon, I don't know what's going to stop this really. This could, together with the politic jitters and whatever that goes on in Canada right now. I mean, this looks really explosive. I mean, why not, before year end, unless we see all of a sudden dollar sellers pop up for year end purposes. This is looking still very big, and therefore, Ali, we should now hold around 142 and a quarter, my friend. Around there, okay? Aussie Kiwi not looking good. Not looking good, this Aussie. All the time, we're coming back to those prior lows. We can't get back into the triangle that was there before, and we are hanging again towards the low. So, as I said, I did say earlier that I may get interested, but I'm actually trying to be very patient. So this looks at risk still. So if you go on to a bit of a longer term time frame, if it breaks here, then it's potential for 62 three quarters, and why not even down to 61 three quarters, because this picture still looks very, very weak, if you ask me. Kiwi painting a similar picture, but perhaps not completely falling out of bed. And Aussie Kiwi is a testimony of it. That is still looking a bit weaker. But again, it looks very similar. Okay, if you, for instance, would put like prior low, prior low. If you compare that to that Aussie dollar trend line of the triangle, it's doing the similar kind of thing. 50, 58, the figure. We really need to move back above for the Kiwi to find some stability at least. For as long as we are below, this is still looking quite weak. But again, my warning, expect the unexpected for the year-end flows, okay? But both Aussie and Kiwi are not looking too good right now. What else? So that is for your Kiwi. Now, Swiss. We need to talk about the Swiss a little bit. If a weak currency is holding against another weak currency, it's what I said. It is really testifying that the second currency, in this case the Swiss, is on a weak footing, and this Euro Swiss is always kind of my barometer. If Euro Swiss goes up, most of the other Swiss pairs is also going up. I mean, Swiss weakening. And yesterday we went above this 100 DMA, and we actually opened relatively bang on it, and we are actually opened a little above. We went to retest it, and now we are holding it. So this is your first level here, 93.85, then 93 three quarters, and I'd say 93 and a half. Keep that 93 and a half in mind in the Euro Swiss, because there as well, if we all of a sudden would see year-end flows doing the similar thing as last year, if you start to break below 93 and a half, then we need to abandon, I think, at least until the year end, we need to abandon the idea of the Swiss weakening further. I'm a little long dollar Swiss because I think it is justified on the back of data, on the back of um, data on both sides of this pair. Yesterday, encouraging that we went to retest the 89 the figure and started to move higher. We are now also shyly, but above the prior high in November. So there is a potential here, maybe even ahead of or into the FOMC or on the back of the FOMC to go for a test of 90, 20, 90, 40. I am regularly as usual. Regularly, I took a little bit off around here this morning of my lungs, and I'm keeping always keeping my um, leverage, if you want to call it like that, or keeping my positions to levels and yeah, where I can fast move out, and when I can where I can change them relatively quickly. I remain flexible since we are trading year end. Now, there's one which, well, no, sterling Swiss, no, that's not the one. But sterling Swiss is also one that I again re-entered yesterday, since we were holding here around that 113.20. I'm bought a little bit back again. Also for that reason that sterling should do well, and Swiss remain weak. It's just a combination of both. I like it when I'm a view on one currency starts to fall into place, combined with a view on the other currencies. You always weigh the stronger versus the weaker currencies, and this looks to me like it's a pretty decent cross to hold into well, for at least into the Bank of England meeting, perhaps, and then we will see what we do with it. Panic level below 112 3/4. If it goes back below there, maybe not right to hold, but in the meantime, trading it around and trying to improve that average so that the account is not at risk. I wanted to show, where is it? Oh, here it is. This one. Sterling CAD. I'm usually not really looking at that, but this is one of another example of what I just said. If you look at the currencies that are doing better, and well, in my personal view, expected to continue to do pretty okay, versus currencies that are really having an issue right now, and the Canadian dollar is clearly having an issue right now. And look at where we are. This is a daily, yeah? 1st of October, 1st of November, and now we are here, and we are hammer banging again against that 181.5 level. If this goes up, if it caps, it's a triple top. And then, of course, this is very strong, right? But if it goes, it could equally go for another leg higher, 183s, potentially even 184.5, I would say. It's not out of the question. Also, if you look at how trend lines and channels here as well, the channel support has been holding. So this is more like a medium-term play. If you want to keep it, bear in mind those year-end flows as well, because you could see a spike and then come back. But if you look at currencies, as I said, that can do well versus others that are doing not well at all. Also, the Canadian can't find support from energy, for instance, because oils are not really on the fly either. This could be a cross that is looking a little explosive into year end as well. Gold and silver, and then I'm going to call it a day for today. Looking fragile. Okay, look, gold, they're both looking fragile. Nicely done. On the gold short, for those who are short, it is still looking fragile. As I said, it's finally on in our room. It's finally undergoing the laws of gravity on the back of interest rates. I still think it's a pre-FOMC rebalancing of the books or managing of the books, but we can't. It's undeniably undergoing the laws of gravity, as I said, into the FOMC meeting. Longer term view, still unchanged. I mean, that is really still unchanged for as long. To me, my red line is still here, 25.90. But in the meantime, for the intraday traders, there is a risk that we are breaking below 30.35 here before FOMC, and that we are going to have a look again at those levels here that we saw here, 26.10, 26.05 perhaps, okay? So that is something that is a possibility going into the FOMC. If in turn, or that may be one for after the FOMC, the sell the rumor buy the fact kind of move, that is potentially coming as well. If we start to move back above 26.65, then I think we we will move higher. But yesterday was really telling that we stopped bang on the 50% of this bigger move down that we had in October, November. Silver, similar. We are about to test the box again. As I said, don't discount it. It's possible, and we are here. Again, same thing as in gold. I think it's possible that we go and test what's happening down here. Can we break it? Could be a stop run. Is there a reason for breaking it? Not really, but FOMC yields, they are the drivers right now. So it is possible that we are going at least for a revisit of the 29.6570 in silver. Okay. Um, if we get a BOE hawkish tomorrow, the Bank of England is actually the day after tomorrow, Ali. So they are meeting after the FOMC. So we will have to wait for Thursday to know what the Bank of England is doing. But based on the numbers, it is possible that they are a bit more hawkish. And you know what? A bit more hawkish than what they really want to be themselves. And that is also something that we need to take into account because the market will be, if they need to be hawkish, but Bailey goes like, well, it could also be a case of the sterling seeing a blip higher and then all of a sudden reversing if Bailey comes in with a sends an accident into the sterling market. All right, ladies and gentlemen, thank you so much for joining me today. Um, and we will see each other again tomorrow. Don't do anything stupid as usual. So keep the clock close to hand, okay? Just don't be surprised if we start to see 4 p.m. London time moves, okay? Have a great day, and we talk to each other tomorrow again.